the combination of ongoing fiscal dominance is pretty good for Bitcoin. The policy mix is probably neutral to bullish for Bitcoin. When I look at certain on-chain things, like really basic stuff like market value relative to cost basis, or the HODL wave, like what percentage of coins haven't moved in a year, and both of those still look kind of mid-cycle. Now, cycle structure could change, so there's no guarantee, but most signs to me still point up. 12 months, anything can happen, but if I say 12, 18, 24 months, I'm still pretty bullish on Bitcoin at these levels.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Lyn Alden dives into Trump's policies, inflation's impact on the economy, MicroStrategy's bold moves, and Bitcoin's evolving role. Let's catch your insights and uncover the story behind these key topics.
So far, I think it's been mostly on track of expectations. We saw generally what was expected. So we saw the speech that he gave. He covered a lot of the topics that are so far in line with what they campaigned on. Basically, America first, more aggressive trade policy, interesting comments around Panama. We'll see how some of that shakes out. So we got a little bit of a rally on Chinese equities, a little bit of a sell-off in the dollar because there was no immediate early action on tariffs. But we can still see that show up in executive orders, and they still made it clear that going after that trade issues are going to be a big thing. So far, nothing surprising. I think the biggest surprise probably happened shortly before the inauguration, which was the meme coin launch. Not many people saw that coming, including myself. So that's probably the biggest surprise, at least in our industry. I think he's more of a crypto-aligned president, which includes Bitcoin. I think I wouldn't characterize him as a Bitcoin president. I mean, he did NFTs, they did DeFi. Now we got the meme coin on Solana. I think a lot of it is transactional. I don't think that surprises that many people about his history. I think it'll see what happens with the SBR. I think, for example, his incoming Treasury Secretary pick was at their crypto ball. So that's relevant. The fact that there's multiple pro-Bitcoin people in his administration is interesting. There's probably competing voices. He's a big proponent of Dogecoin in his inner circle as well. So we'll see how that shakes out. But I think the main takeaway is probably on the crypto side, you'll see more lax regulation. So the prior administration was characterized by a pretty aggressive SEC that tried to block things like spot Bitcoin ETFs, and was very kind of haphazard in terms of the things they went after, and even lost a lot of court cases. It was just not in my view a very, and they wouldn't issue guidance on how to do things. If someone said, okay, we want to do real world assets or whatever kind of crypto thing you're talking about, they say, okay, if these are securities, is there something we can do to make these legal? And they kind of didn't really provide that. So I think the pendulum's probably shifting the other direction, which is unclear enforcement, as of yet unclear guidelines, and then the president himself has his own meme coins and their own kind of crypto securities. So probably a more lax and laissez-faire approach.
Bitcoin may be gearing up for a significant leap, with projections suggesting it could hit $122,000 by February before entering a consolidation phase. Marcus Thielen, head of research at 10x Research, highlights Bitcoin's recent breakout from a wedge pattern, labeling it a low-risk, high-reward entry opportunity. Following a bounce from $98,937 to over $107,000 on January 21, Bitcoin has demonstrated impressive strength, trading above $105,000. Analysts believe this momentum could propel Bitcoin to new heights within weeks. Thielen notes that since the approval of spot Bitcoin ETF in the U.S., Bitcoin's price has consistently moved in increments of $16,000 to $18,000. If this pattern holds, the next target of $122,000 seems well within reach. Beyond this milestone, the rally may extend further, potentially pushing Bitcoin even higher before retesting key support levels. Supporting this outlook, Keith Allen of Material Indicators points to a bullish cup and handle pattern on the weekly chart, suggesting a continuation of the upward trend. Bitcoin's reclaiming of key moving averages signals resilience and positions the cryptocurrency closer to its all-time highs. With technical indicators favoring further growth, Bitcoin's journey to $122,000 represents not only a possibility but a critical moment for traders and investors alike. Whether this trajectory continues or consolidation sets in, the coming weeks promise to be pivotal for the market.
Bitcoin price actions historically pretty correlated with liquidity. It's not the only correlation, but it's one of the more sizable inputs to Bitcoin price in the intermediate term. And so the debt ceiling, basically ever since roughly World War I, instead of Congress micromanaging every Treasury issuance, they say, look, the Treasury Department can do those details, but you can't go over this limit. And that's different from authorizing spending. This is basically just how they pay for spending that they do authorize with their other bills. It's kind of like whether or not the government's going to pay their previously agreed to bills or not. Mm-hmm. And for roughly a century, it wasn't really used by one party against another. But ever since the global financial crisis, it's a tool. Now we're in this age of more political polarization. It's a tool that can be used largely from the out of power party against the in power party, or at least whoever is president at the time. It can be used against them to extract some degree of negotiation. And if it's not lifted, you get technically the risk of a technical default. In practice, usually at the 11th hour, it's fixed. And we have a fairly small sample size because it's only been used since the global financial crisis. Usually it's used against Republican Congress, against a Democratic president. But that's partially because most of the years after the global financial crisis have been run by a Democratic president. Democrats didn't really use it against Trump in his first term, and we've not really seen like intra-party usage. This, if it's used here, and so far it is a little bit, if it's used here, it would be the first time, at least in modern history, where the Republican Party is using it against a Republican president. And so if they do enforce it and they try to extract concessions, then essentially the Treasury cannot issue net new debt. They can't increase the total debt load. To the extent that some are due, so they pay out, to existing maturing debt, and they can issue some new debt to kind of offset that, but they can't increase the total amount. And so they have to start taking what they call extraordinary measures. And that's the date that matters for January 21st, because the outgoing Treasury Secretary Yellen and her team estimated that the 21st is when they basically run into the actual debt ceiling and have to start shuffling their books around to keep things operating without issuing new debt. And the part that's relevant is that if this starts going on for weeks and months, they have to start draining their cash balance back into the financial system. So at any given time, the Treasury has a Treasury General account. It's their big checking account at the Fed. There's something like $650 billion in it right now.
CLS Global, a cryptocurrency financial services firm based in the United Arab Emirates, has admitted to engaging in market manipulation for a digital token created by the FBI. The token, called NextFunday (NEXF), was designed as part of an undercover operation to expose fraudulent crypto activities, particularly pump and dump schemes. CLS pled guilty to charges of wash trading and wire fraud, agreeing to pay a $428,059 fine and forfeit funds held on Binance and KuCoin. The FBI, posing as scammers, enlisted CLS to artificially inflate NEX's trading volume, to deceive investors into believing the token was more popular than it truly was. As part of a plea agreement, CLS is banned from participating in U.S.-based crypto transactions and will be on probation for 3 years, monitored by the SEC. This marks a pivotal case in exposing fraud within the cryptocurrency market. Elon Musk's influence in Washington reached new heights as he joined Donald Trump in the Oval Office to witness the pardon of Ross Ulbricht, the controversial creator of the dark web marketplace Silk Road. Ulbricht, serving 2 life sentences plus 40 years for facilitating drug sales and other crimes via cryptocurrency, was granted clemency by Trump as a nod to the libertarian movement. Musk, now informally dubbed Trump's first buddy, proudly announced his presence during the pardon, sparking curiosity about his sway over the president. The drama didn't stop there. Musk hinted at lobbying for clemency for another controversial figure, Roger Ver, the so-called Bitcoin Jesus. Ver, facing charges of tax fraud and evasion, remains under scrutiny for allegedly concealing massive Bitcoin holdings during his expatriation process. As Trump's inner circle tightens, Musk's role continues to draw attention, lending influence, controversy, and political intrigue. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.